Good evening, VV Nation. My name is Ryan, Senior Instructor here at VectorVest. Now, this week I will be introducing a new series that we'll do each Thursday over the next few weeks. Now, since COVID, a lot has changed in the economy, how we do business, consumer behavior. There's been a lot of disruptors. So the topic of this series is going to be industry disruptors. Now, for the first part of this series, we are going to go into fintech. You know, everyone's heard of apps such as Venmo, Cash App, Apple Pay. It changes how we transfer money and look at banking going into the future. Now, if this is something that you're interested in, let's get started. So what is a fintech disruptor? Now, I did pull up Google here, states that these are startups offering consumers accessible, streamlined services at every step of the financial management process. By providing more ways to buy, sell, save, invest, and loan, fintech is disrupting the market and democratizing services that were once only provided by massive financial institutions. So I do just have two articles before we jump into the stocks. So let's go to the first one here. This here is a partnership between Microsoft and PayPal looking to bring Venmo support to the Microsoft Store and Xbox Store. This is huge for Venmo. You know, Microsoft's got a huge platform through their Xbox services, giving consumers the ability to buy games, buy streamlined videos. Thus, this will just open the door to more consumers for Venmo. Now, as I read through this article, it did state at the bottom that Venmo recently just had a partnership developed with Amazon. Therefore, consumers can now purchase products through Amazon via Venmo. This started last October, giving Venmo more access to commercial platforms rather than just giving exchanges amongst friends and family. All right, now the last article we have has to do with Apple and their financial services. The article states Apple's card new high yield savings account is now available, offering a 4.15% APY. That is 10 times the national average. In addition, what I thought was very interesting with this new rollout program is that there's no fees, no minimum balance requirements, and no minimum deposits. Now, this is clearly to enhance the Apple ecosystem as we know it. Again, this is a huge disruptor because as of right now, as I stated before, this is 10 times the national average for a savings account yield. So now let's jump into the VectorVest 7 software and let's see what stocks I've got for you. All right, what we've all been waiting for here are my top 5 picks for fintech disruptors. Now on this list, we do have 4 stocks here: SoFi, Intuit, Apple, and PayPal. And then down below, we do have an ETF by Global X, Fintech. Now the first thing we're going to do is look at their valuation metrics. If we look at value and compare it to price, we notice that the top 3 are all overvalued right now, so you would be paying a premium for these positions. However, PayPal Holdings is the one undervalued position in the list, currently trading at $74.55. And we value at $96.90. Now from RV down to VST, these are all on a scale from 0 to 2. Above 1 is favorable, below 1 is unfavorable. Now RV looks at long-term price appreciation. They all have favorable ratings except for Apple, which right now is at 0.81. Now if we look at the safety rating, or RS, this is just an indicator of risk looking at the company's financial performance. The laggards in this department would be SoFi and PayPal Holdings. So with these two positions, just know that you would be taking on a little bit more risk. Next, we have RT, or relative timing. This looks at the short-term price trend, and this is what I like the most. All of these stocks right now have a favorable short-term price trend, and the magnitude of that trend is rather strong. Next, we have VST. This is our master indicator combining value, safety, and timing all into one single entity. All of these stocks here have a favorable master indicator, or VST, above 1. And they do all have a buy rating currently. So that way we know that they're trending up and they have a VST greater than 1. And if we take a look at the buy rating here, they are all currently have buy ratings. Now, the only thing I did want to look at past the recommendation column is the GRT, or growth rate in earnings. This is in percent form. If we look at SoFi here, it's the leader of the pack, growing its earnings at an astonishing 25%. Now, there are no negative growth rates, so that is a positive sign. So I briefly described the indicators, so let's take a look at the graphs here. All right, first on the list, we do have SoFi here, nice bottom left to upper right price action. We've got a strong buy rating on it. And if we look at ART, has remained above 1 for quite some time. As well, look at this earnings per share, nice stair-step fashion from lower left to upper right. This is exactly what we want to find in a graph, and we're going to see a common theme between these. Nice price action once again with Intuit here from lower left to upper right. We just recently hit a high as of last week. I'd like to see that high taken out just to make sure that momentum continues to the upside. And if we take a look at RT, we can see that is moving up nice and smoothly as well. And look at its forecasted earnings per share also increasing in nature. So let's go to the next one. We've got Apple. Doesn't get much smoother than this for a stock price. Nice lower left to upper right. RT is remaining above 1 and starting to climb again, which is a good indication of that momentum continuing to the upside. And if we notice, the earnings per share also climbing over the last 3 months. Next on the list, we have PayPal Holdings. This did get beat up pretty bad, having a sell rating for quite some time. However, the buy rating did come in here on July 11th, 2023. We've remained a buy rating since then. And we do notice that price action is continuing to climb, bringing the RT back above 1 into favorable territory and also starting to rise once again. And if we notice, this company is making money with its forecasted earnings also on the rise. Now, next on the list, we do have our ETF here. This is for the fintech space in general. Nice steady price action here. Now, I would like to see this high taken out just to continue that momentum to the upside. We do have the buy rating here, which is favorable. And if we take a look at RT down below, we do see a series of higher lows indicating that price trend is gaining momentum to the upside. Because it is an ETF, we do not have EPS data for this position. Now, I hope you enjoyed tonight's video as I introduced to you my new series, Industry Disruptors. This will be 6 p.m. on Thursdays over the next several weeks. Now, next week, we will be covering IoT, which has revolutionized everything from home appliances to healthcare applications. If that's something that you're interested in, please hit the like button and subscribe to our channel to get further updates.